USD risk ahead, guys. We've got the FOMC rate decision, 7 p.m. London time tomorrow, 2 p.m. Eastern time. What are we expecting then? So, just go through it all methodically, starting with rates. We're expecting rates to be on hold at 0 to 0.25% because one, the Fed have said that they're not going to take rates any lower. They don't like negative rates. They think, there's probably more negatives to do with negative rates than there is positives that you're going to get out of it. Equally, the Fed have said they're not going to look at hiking rates for a very, very long time because look at the state the US economy is in. They're going to have to wait for it to improve a lot before they think about tightening again. And this kind of brings us on to the tone of the meeting. Fed's still going to be very, very dovish on the outlook because data's been getting better. Like that NFP jobs data was great because it showed that the US labour market's actually improving now, earlier than expected, but the labour market is still very bad, guys. 13% unemployment. Like only a couple of months ago, we're at just over 3% unemployment. So still very bad in the US. Fed's still going to be very, very dovish. The next interesting part of the meeting, there's a lot of focus on what forward guidance is the Fed going to give us now, because before the Fed was more focused on reacting to the coronavirus pandemic, whereas now they've got all these programs. They've got these big lending programs. They've done their limitless QE program. They did all those liquidity repo operations, swaps with other central banks, all this kind of stuff. And they did stop a financial market crisis. Now markets are looking forward. Under what conditions are you going to start hiking rates? They want to know that. Instead of just limitless QE, markets want to know how much QE, what amount are you going to be buying per month? So the Fed might look to transition towards a more traditional program in which it says we're going to do 80 billion a month, 40 billion in mortgage-backed securities. Who knows? Fed are probably thinking about this at the moment. Also, there's been a lot of talk in recent months about the potential for the Fed to do yield curve control. So that will be another thing which market participants will be on the lookout for. In terms of how the dollar is going to react to all of this, well, like I said, Fed still very, very dovish. So unfortunately, this meeting is unlikely going to be a dollar positive. In terms of, like I said, there's not really any big policy changes that we're expecting, so probably not going to be huge dollar volatility like we see at some meetings which are live being when there could be a big policy change. But to be honest, the fundamentals for USD, guys, are just not good at the moment because generally speaking, last couple of weeks markets have been very risk on, which has been bad for USD. US economy is doing very badly, bad for USD. US interest rates very low because US interest rates used to be a lot higher than the rest of the world, so that US was a more desirable place to put your money, but not anymore. And the dollar has started to turn. I just really don't think that this meeting will be able to stop the dollar's bear trend in recent weeks, guys. That is pretty much it from me for now, and I will see you in the next one.